Wagwan guys, welcome back to another video. So one of my subscriber asked me to make a video on how to catch the spikes and the crash on the boom and crash index market. So here in today's video, I will be teaching you guys this profitable price action strategy used in catching the spikes and the crash on the boom and crash index market. This strategy is a simple price action strategy that works on every boom and crash index. So we're working with the 5-minute time frame. So what do we do on the 5-minute time frame? We identify the market direction, the market trend, and spot the market levels and zones. So we got this index on a downtrend at this point, creating lower highs and lower lows formation. Remember, we are only working with the 5-minute time frame. We don't care about the higher time frame moves because we usually don't get spikes and crash on higher time frames. It's on lower time frames like the 5-minute time frame we see the boom and crash index give the spikes and crash on. So on the 5-minute time frame, we got the market on a downtrend. That's the first thing we spot, the market direction basically. So in that market direction, the next thing we do is to spot levels and zones. It's on these levels that we'll be looking out for trade opportunities. Because on the crash index, crisis 100 index, our interest is on the sell side of the market. To catch the crash to the downside, we only sell on the crash index and buy on the boom index when it comes to catching the spikes and the crash on these indexes. So here we got a level of support which price has been giving the buys. Market was moving in six here, buying up. So automatically we got the crash the first time, crashed to this level of support, pushed up here, crashed again the second time, crashed the third time. So at this point, this level got broken and we got this little six to the upside that came to give a test of this level. Then we got another crash to the downside. So at this point, the stock price crashed to the downside. And remember, we spotted the market direction and we've identified that the market is on a downtrend. So we expect price to move up back to this zone, this level that was a level of support, and we'll be looking at for sell opportunities on this zone. So our stop loss would be above this level because when we are selling on the crash index market, stop losses works because the market pushes up in six, so we can easily get stopped out and will be stopped out on a calculated risk. Unlike when we are buying, right, we can get the crash and the market will not respect our stop loss levels. So when we are selling on the boom and on the crash index, basically we use stop losses and it works very well. Price respects stop losses. So here we got the market push up to this zone, which will be placing a sell trade here, and we got the first crash. The market pushed up a little bit, crashed again. Our stop loss will be above this structure. Let's say our stop loss is on the line on a level of 16,950. Let's change the color of this to like red, right here. This will be our stop loss level. So stop loss here, price crashed the first time, crashed the second time, the third time we got this good crash, and the market still crashed. So we are still holding our sell trade, even on getting this little retracement, these little buys. We still held our sell trade. So our target level would be on this last close here, which the market crashed to, and we made good money on this. This is about 3 to 1 risk to reward. Price crashed to our sell target level. So following up, we got another level, a new level formed here, which would be our next sell zone. Remember, the market is on a downtrend, so we'll be looking out for sell opportunities alone on this level. Seeing this level as a level of support, got price buy the first time, second buys, and third buys, price pushed up. So this level getting broken and retested, we are looking out for sell opportunities. So we are still catching the crash. And when we sell, the market moves in losses, like we see price moving little loss when we sell. So when price crashes to the predicted direction, when the market sells, that's the crash move, we get our trade move back in profit, in big profit basically, unlike the little loss we are getting when price was pushing up. So we got the crash here, price crashed the first time, the second crash, and the third crash at this point. When we extend this thing, you can see that looking at for sell opportunities on this level, we'll be catching a lot of crash to the downside. So what we do basically is to spot the market direction on the 5-minute time frame and spot levels of resistance basically to catch the sells. We have another level here on the 5-minute time frame, which I would have taken a sell trade on to show you guys a live example, but I missed out on my entries at this point. So we got the first sells here, price sold as a resistance. So we have to wait for 3 sells of this level, 3 major crash. If you are to sell on horizontal levels, wait for 3 major crash on these levels. So we got the first crash here, price dropped massively, second crash here, and the third crash at this point, which was our entry point. So we are getting to the trade at this point. We are catching the sells to the downside after we've confirmed this level to be a potential sell zone in the market. All we have to do is wait for price to push up back to this zone and we'll be selling. Our stop loss will be above this structure here. So imagine taking a sell trade here, making good money from this crash. Price crashed the first time, second crashed, played around here like 2 times or 3 times, crashed again, crashed again, pushed up a little bit like a retracement, a corrective move, to crashed again. So just say your target level was on this level, on this zone. You've actually closed in profits because the market is reacting to this level of support, this level of same price, buy on. Let's place this properly. Market is reacting on this level. So let's say your target level was at this point. You've gotten all your TP smashed. Your TP has been smashed basically because this is a potential exit point. Seeing the buy reaction on this level, still have purposes of getting the buys from this zone. So this would be your exit point on catching the sales from this point, from this level. So the same thing is applicable to the boom indexes. We only buy catching the spikes to the upside. So let's check one of the boom indexes. Let's check boom 900 index. So on boom 900 index, we do the same thing, spot the market direction, and it's clear that this index is in an uptrend, creating higher highs and higher lows formation. We spot the market trend firstly, and on this uptrend, we identify the market levels and zones. So let's say this is our level, a level that we expect price to buy on, getting the past price on this level, same price, buy on this level, first time, support, support here. So if price can sell into this zone, we should be expecting the buys, having that the market is in an uptrend. So we have to look out for any buy opportunities on levels on this zone. So you have a new level here at this point, which if the market can sell into this level, I'll be looking out for a good buy opportunity on this zone. So I'll wait for price to sell into this zone, and I'll be placing the buys. And when we are buying on the boom index markets, price will expect stop losses because the market moves downwards in ticks, little drops. You can easily get stopped out with our calculated risk, unlike when we are selling on the boom index market. So our entry point would be here, seeing past reactions here, resistance, price, selling resistance, resistance before it got broken. So a little drop to this zone, I'll be buying this index from this level on the 5 minute time frame with my stop loss below this last low, somewhere here. Stop loss would be here. And checking the past, this first level, got price, buy here, support, support, support. Let's say we looked out for trade opportunities on this level. We caught the first spike, price pushed up again. We still caught another buy move here. Price pushed up good to this level, crashed back to this zone. Another entry here. Still caught the big buys back to this zone. So if price can sell into this level, I'll be looking out for a good buy opportunity on catching the spike to the upside. So that's it, guys. That's how to catch the spikes and the crash on the boom and crash index market. Work with the 5 minute time frame, identify the market trend first on the 5 minute time frame, then spot the market levels and zones on that 5 minute time frame. If the market is an uptrend on the 5 minute time frame on the boom index market, but look out for buy opportunities. And if the market is on a downtrend on the crash index market, look out for sell opportunities. So do well to implement this strategy and see how effective and profitable it can be. So for more trade teachings like this, do well to smash the like button and drop a good comment on this video. Don't forget to subscribe if you are new to the channel, and to my returning viewers, I appreciate the support for engaging in my videos. It means a lot, guys. Let's do more and do have a wonderful day.